Hello again, my friend. This is the Quant Edge 4-week coaching program, week 3 on broadening formations. I'm Rob Smith of the In the Black Quant Edge VTF here at T3 Live. And as we move along here, the first video in week 3, as you peruse the disclaimer one more time, I want to be very clear as we start this section. If you are unclear about the previous two universal truths that we talked about, the actionable signals, what they look like, and time frame continuity, I would stress that you would go back and you would watch those again before even attempting here. This is where things get a little more challenging to understand. And so you want to have a full and complete understanding of what the actionable signals are, what they look like, and the importance of time frame continuity as it applies to them. Because the broadening formations are going to get a little tricky. Once you understand them, as you're going to see today, that's where we can gauge the magnitude and what signals we want to take, when, why. So for today, table of contents. First of all, we're going to prove the proof of broadening formations. We're going to prove they exist. Then we're going to look at actionable signals combined with the broadening formations. How the broadening formations become support and resistance, if for lack of a better term, have time frame continuity with the broadening formation, so we can start slowly putting everything together, right? When we combine these outside bars with actionable signals, as you'll see the importance of the outside bar, using broadening formations to time the actionable signal triggers, then a little bit on how to draw them, and then we're going to get to the end, and then we're going to get to some more live charts. So, what are broadening formations? Broadening formations are any series of candles where both highs and the lows of the previous range are breached. Right? So you'll have one bar, a range, and that next one goes above and below. Right? Because as you'll see, everything that trades will trade in a continuous series of price discovery broadening formations, period. All right, and we're going to get to that proof, period. That's how price discovery works. And understanding this is what helps us gauge magnitude. It tells us how far we can expect things to go when we combine them with the other two. Section 1, proof of broadening formations. So, the proof of broadening formations and the falsehood of using traditional technical patterns. Because debunking classical technical patterns is easier than you may think. Not only are they subjective, but they cannot be positively identified until after completion. This alone makes traditional pattern recognition absolutely worthless. Right? From a quantitative standpoint, everything must be defined as true or false. If-then statements true or false. Either a condition exists or it does not. Right? And thus can be proven. So if you hear people saying it looks like a head and shoulders, and how come sometimes it goes up? And if you read any books, classical technical analysis, there will be chapters about head and shoulders and failed head and shoulders patterns, which is somewhat comical. Because a dog is always a dog. It's not sometimes a cat. And so people will believe these things because when it goes in their direction, they'll be like, see, it was a head and shoulders, which is absolutely false. And then it's already completed, which makes it worthless. So either it is something or it is not something. So once you can get classical technical patterns that anybody's ever told you before out of your head faster, the happier you're going to be, as you see as we go along. Broadening formations are a universal truth because the breaching of both sides of a range of an outside bar cannot be disputed, right? So if the range is taken out on both sides, no one can say that didn't happen, right? That condition exists. The existence of broadening formations is important because through price discovery, range breakouts fail or they are successful, right? And so when these breakouts fail, they're going to try and test the other side, as you're going to see. Outside bars prove the existence of broadening formations because they show that both sides of the highs and lows of a previous range were breached. So simply the fact that outside bars exist is proof positive that what I'm saying is true. No one can dispute that. As a result, the lower time frame must be a broadening formation, and that's what you'll hear me call them fractal triangle. right? So if you have a outside bar, which took out both sides, from a visualization standpoint, you won't see the triangle, right? But we know it's there. Therefore, we can take it down to a shorter time frame to identify the triangle, the fractal triangle. But the outside bar tells us that it's there. So once again, let's look at outside bars. All right? There's a few different types of way this can happen. Bullish engulfing outside bar. A bullish engulfing outside bar must gap below the previous bar's low. So here, as you can see on the right, here is this bar. This gapped all the way down here and closes above the previous high. The wicks are irrelevant. This is the range, the high of that, the low of that. This gapped below, closed above. That is a fractal triangle on a shorter term basis. It's bullish engulfing because the opening and the close completely engulfed the entire bar, right? Just completely mauled them down. Conversely, a bearish engulfing outside bar must gap above the previous high and then close below the previous low. Here, gaps above, completely above this bar's range, closes completely below this bar's range. That is bearish engulfing, and it's an outside bar fractal triangle on a shorter term basis because it has to be. The regular outside bar, it breaches both the highs and the lows of the previous bar, and the opening and closes are contained back in the previous bar's range, or at least one of them is. So regular outside bars are oftentimes misidentified as engulfing bars. They are not. They are two different things. All right? The engulfing are going to be more powerful, most likely, because they have completely wiped out the other side. At this point, you can see the battle is on. They've tried the highs, they've tried the lows, but come back and are still within this range. Still within this range. The open here was still within this range. All right, so the other possibility, there's two other possibilities of how an outside bar can form. You can also gap up and go all the way down and come back up for an outside hammer. You can also gap down, go all the way up and come all the way back down for an outside shooting star. Those are the only possible outside bar outcomes. So if we go back to what we've talked about in the previous videos, since an outside bar is also a fractal triangle, right? What that means is the 1 bar rev strat, right? Those are broadening formations on a fractal basis, right? Because on a 1 bar rev strat, it took out both sides of the range, right? By definition, therefore 1 bar rev strats are broadening formations. Section 2, actionable signals with broadening formations. So actionable signals with broadening formations. The importance of combining actionable signals and broadening formations. If the broadening formation continues to expand, so does the potential magnitude of our expected move. Right? By definition, the ranges are getting bigger. Right? However, the expected move is always subject to the exhaustion of the actionable signal or signals and changes in time frame continuity. That's very important. We can draw a triangle. Just because we have it there or we can have identified it doesn't mean doesn't have any risk, right? Because anytime those actionable signals exhaust, right, and the time frame changes, right, we have to be aware of that. Hammer following an outside bar. So what we know from actionable signals is a hammer is an actionable signal. In order for it to go in force, it needs to trade above the high of the hammer, right? So if you look at this, we can look for the high of the outside bar. So in force, we can look for the high of the outside bar to be breached as the broadening formation continues to expand. What does that mean? What that means is we've identified an outside bar. So on a fractal basis, that's a triangle, right? And so what you will see as attempts at one side fail and get reclaimed with an actionable signal, oftentimes what we can look for is to completely take this bar out with this hammer, right? Very important that this took out that took out that. Now they tried to expand the range, and if they failed that, we're looking for this hammer to try and be powerful enough to come up and go back towards the high of the fractal triangle. That's why we want to look for hammers countering outside bars. All right. To have identified and gauged the potential magnitude, you can look for the lower time frame. In this case, the hammer following the outside bar is on a daily chart, so you can look to 60-minute. Right? Go down to the 60-minute for the fractal triangle and see it a little more clearly. Conversely, the shooting star goes in force below the low of the shooting star. Right? At that point, to gauge the magnitude, we want to look at this outside bar to get taken out. Right? As we get down to a fractal basis, we've got a triangle that attempted to expand and is now coming back in. If this expansion continues, we can come down and take all of that out. To identify and gauge the potential magnitude of the broadening formation, you always look to the lower time frame again, right? Again, the shooting star following the outside bar on a daily chart, so we can look to the 60-minute fractal triangle here, right? We've got higher highs, we've got lower lows here. All right, so if we go back to that, this is what we see here on the daily. But to go back fractally, we go into a 60-minute, we can draw off the recent highs and lows. Here's your triangle. Higher high, lower low, higher high, lower lows, higher high. There's also some sub in here, which we'll get to later. But then you can see it. And so if this starts kicking in once again as the range expands, you can see how here you had an inside bar come off here and come all the way back up, but then forms the shooting star to try and bring it all the way back down as this range continues to test both sides. The importance of an inside-outside, inside bar pattern. Right? It's twofold here. First, the outside bar tells us that we have a broadening formation by definition on a fractal basis. Second, the inside bar represents a contraction in the volatility, a contraction in the range. Therefore, should the sequence of an inside bar, outside bar, inside bar, contraction, expansion, contraction, continue, the next move should be an expansion. Right? And so why can we expect that? Because based on the fact that the second inside bar, or both of them for this case, both of them, right, is an actionable signal. It's formed at equilibrium. Therefore, we have every reason to believe this sequence will play out. Inside, outside, inside, bam, right, expand. So when the second bar goes in force, right, we can look for the low of the outside bar to be breached in this case, or the upside if it goes to the upside as the formation expands. So if you see this here, we go inside bar. We go outside bar by taking out both sides. We go inside bar again. Now, when this inside bar gets taken here or here, we're looking for at least this outside bar to get taken out. And in this case, bam, volatility expands, range expands hard, which then comes back up, and we'll get to that later. Triangle them back up. But for this case here, inside, outside, inside. Something you want to know about. To identify and gauge the potential magnitude of the broadening formation, you look at the lower time frame again. In this case, the daily shows an inside-outside bar setup. If we look at the 60, you'll see the fractal triangle. Right? So what was it doing as it was doing that? Goes down, tight in here, slower, lower, low, higher, high, lower, low, higher, high. Your inside day. Right? Goes down here, takes those out, comes back up. There's your outside bar, because this and that were lower and higher than these things. Then it comes into here and forms this, which was not higher than that high, nor that low. There's your inside. You come in the next day, boom, triangle expands off that actionable signal down into here. It does reclaim up into here, and we'll get to that in just a bit. The concept here, since broadening formations represent price discovery, that means they're attempting to go up or attempting to go down, the failed breakout of any range increases the probability of the other side of the range being tested because they're going back, test the top, test the bottom, all right? So this is important to know, right? The probability increases if the actionable signal is the triggering the initial reversal. So that's what we've just seen. We've seen it can come back into the range, but because we know that actionable signals are what makes price move, we look for these actionable signals to trigger back into previous ranges. All right, so that's why we're looking for the hammer countering the outside bar, the shooting star countering the outside bar. It tells us that we have an actionable signal going back into an expanding range. And should that continue, we have caught the new higher end of the range, and we will go test the other side. So in this case, the hammer is also a 2-bar rev strat since it follows an inside bar. So if you can see here, once again, the higher high is the lower low, the higher high, the lower low, right? And then you can see this range here, it goes hammer, which is also a rev strat because this was an inside bar. If this works, you've caught the bottom of the range here. Now potentially all the way back up at least to here. Now this is going to be subject to the change of time frame, right? And the exhaustion of this hammer. We don't have this hammer anymore after this is gone, right? But that's exactly what we're looking for. All right. So here, if you can notice how the price retreated the following day. This is what I'm talking about when I talk about, this is an example of time frame continuity risk, as the daily and 60-minute participation group signals end with the close of each trading day. So in this case, we've got the hammer that goes back into the previous range, right? You can see this here, lower low, higher high, lower low, comes back in off the hammer, jacks them right here. But the next day, since we are at continuity risk because the day and the 60 are over and that signal has exhausted, this is no longer in force, you're at risk of something like this happening, gapping right back down into you. All right, so that's why we want to have multiple actionable signals and be aware of the reason that swing trading can be more difficult is because you are constantly subjecting yourself to continuity risk. Anytime you hold something overnight, 2 of the 4 time frames are going to start over on you, and you are exposing yourself to that risk. And in this case, because you only have the daily hammer, you're at actionable signal exhaustion risk. The day is now over. The signal is now done, and then it can drop back in here like so. So if we can take a look at the reclaiming the range once again, and you'll see this over and over and over again. And you'll see this is not only shooting stars, but you can see the combination of inside bars as well. And so as you can see, as this went to higher highs, lower low, couldn't quite make the higher high, which is also a kiss of death, but makes the lower low, then makes the higher high again, then goes all the way back to the lows. You will see this type of action. This is how price discovery works. And when you look at the actionable signals, you can see here the inside bar jettisons to the highs. New time frame, continuity risk, drops back in, goes inside day. Inside day break, inside bar to the downside, comes all the way back down and takes out the previous lows. That's price discovery. Is it going to go break these lows and stay down there? Then it forms inside day to go back up and start the new series higher. Momentum hammer, which then couldn't quite make the highs and drops all the way back in. Price discovery here couldn't make the higher high. So it's a lower high at that point. At that point, once it starts coming back into the range, now it takes all these guys out and goes inside day. So if this range expansion was going to continue, it would have gone inside day as a rest and continue lower. That's not what happened. This was an exhaustion of this selling. Inside bar equilibrium, momentum hammer, back slightly taking out the higher highs. All right. Now, if that breakout was true, it would have held. That's not what happened. Comes back in, shooting star back into this range. That's a problem because we know that this range is getting bigger. Shooting star, boom, comes down, tests the lows, goes inside here. Now, if it's going to hold here, it would have gone inside and back up, but that's not what happened. It goes inside down, takes out the lows here. And we don't have the clean actionable signal down in here. You had a momentum hammer here. Once you have reclaimed all this stuff to start pulling back here, and now you can see finally the range expansion ultimately resolves to the upside. But if you don't know about this stuff, you'll never catch this, right? As the broadening formation continues to grow, right? This is what we're looking for. Get bigger as the range continues to expand. That's the importance of understanding how these broadening formations work. If you get caught in one that's too tight, just forming, that's when people get chopped up. And oftentimes you will see that as an inside bar is forming. So once again, very, very important. Any actionable signal that reverses back into a previous range represents a possible failure of price discovery. This creates the potential for the broadening formation to test the other side of the range. So when we're looking at these actionable signals, where are they occurring compared to the previous range that we know about? All right? Are they confirming a breakout, or are they confirming back into the previous range? Right? That's how we identify which signals we can take. Otherwise, it would be very simple. We would take every inside bar, we would take every hammer, we would take every rev set. We don't do that because this is showing us how we're going to use these to gauge magnitude combined with time frame count. When we put all these together, right, that's the real importance of using all three. Oftentimes people come to me after hearing just a few things about actionable signals, and they believe that they can trade successfully just knowing that. Right? This is the difference. What range are we testing? What are we reclaiming? So at this point, I'll conclude video 1. Once again, we're going nice and slowly. If you're confused on the first 2 parts, I highly suggest you go back and have a full understanding of time frame continuity and knowing what these actionable signals look like as we continue with this section.